Morning, everyone. It's Travis Watkins, and it's like, I don't know, like the 1000th day or something that the IRS has been shut down. But have no fear, the IRS is bringing back about 60% of its workforce, something like 45 or 46,000 employees to help with the processing of 2018 tax returns this year, and to help folks that are W-2 employees, mainly, folks that would be otherwise waiting on their tax refunds, to try to get them their refunds here in some short order, hopefully. So if that's you, my recommendation is go ahead and hurry up and get that sucker prepared and on file. It's going to be a much more pared down or smaller version of what you're used to on a 1040 tax return. So go ahead and get that prepared. I recommend that you do it electronically because we don't know how many or how quickly a paper return would be processed and refund generated. So do these things electronically. January 28th, less than a week, is when they say that they'll be starting to accept these tax returns. So go ahead and get them on file, and hopefully refunds will be quickly on their heels. So we'll hope for the best, right? All right, today we are talking about how do we find out what options that the IRS will accept. We've talked in previous days here about what your options could be, kind of the universe of your options. And kind of in a nutshell, those are to either full pay it, including penalties and interest, or ask them to pay it out in installments through an installment agreement. Ask them for a deal. That's the offer and compromise program. Bankruptcy is available in some situations, which are way too complicated at this moment to go through, or to strategically do nothing. And note that I said strategically. In other words, don't just do nothing because you don't want to take on the problem head on, but there are certain circumstances. Watch my previous video on that to get a little more insight on what those circumstances could be where you would strategically, and not just because you don't want to talk about it, strategically do nothing. So today we're going to be talking about knowing what options of that universe of issues or of relief would be that the IRS might accept there. And this is a pretty important one, so it'll probably be over the course of a couple of different videos here, but this would be, I guess, part one of knowing, what options the IRS might accept when you owe them some money. I say kind of jokingly, the way to know what the IRS might accept comes down to knowing what's mine, knowing what property and money is the taxpayers, and what's theirs. And I say theirs as in THEIRS, no space between the and IRS in this one. Pretty funny, huh? Right? Anyway, it does come down to what is yours and what the IRS considers to be theirs in a taxpayer's situation when they owe the IRS. So the equation itself is pretty simple. It's not easy or fun, but the IRS will take every bit of every unencumbered asset and every bit of what they call disposable income, and not one penny less, when you owe them some money and you go to them hat in hand and ask for some type of relief from them. And so what that comes down to is what is mine and what is theirs. And they think that everything that's not assigned to some expense that is allowed by the IRS code is theirs, and that's the equation. So how do you figure out what's yours and what's theirs? Well, it all comes down to this nifty little thing called an IRS Collection Information Statement Form. It's Form 433, and there's several different types of Form 433, but just real generally, it's going to come down to filling out a Form 433 and determining what things that you can spend on yourself, keeping yourself and your family alive is really what they're looking at, and the difference between what they'll allow you to spend and what's left over, I guess, at the end of the month. And they want what's left over, the disposable income, plus any assets that you don't owe some third party, for instance, by way of, let's say, for example, a mortgage on your home or on some piece of property. They want all that margin to apply it to what you owe them. All right. Let me switch here real quick, and I'm going to show you some things real generally on the IRS Form 433. So let me kind of exit out of here, and hopefully you can see in just a minute, yeah, my screen. Hopefully you're seeing that right now. All right, so go to my website. What do you know? It's already predictively put into the URL line there. This is my website, traviswatkins.com. And we've got a bunch of different tabs up here. What we're looking for today is the Resources tab. And there's that little nifty screen there. Scroll down to Form 433A. It's about 6 documents down there. Form 433A, collection statement for wage earners and self-employed individuals. All collection alternative programs we offer will run off this form if your liability exceeds $25,000. We'll talk about that here in just a second. You will submit this form if you are a wage earner or a self-employed person. So this is for wage earners, employees of others, or self-employed persons. And let me kind of be clear about that. What we're typically talking about there is a small business owner, a sole proprietor, for instance, somebody with a smaller or individually owned business. If you're talking about a bigger business, one that is set up, say, as an S Corp, you'll also have to file or fill out Form 433B up there. That's one document up from the Form 433A on my site there. Back to the 433A though, if you owe personal taxes, 1040 taxes, this is the one that you must fill out to ask the IRS really for anything. Now, if your liability exceeds, or if your liability is less than, rather, $25,000, so if you owe less than $25,000 individually on taxes, you may not have to turn this particular form into the IRS as part of this. That typically comes into play for what the IRS calls the IRS Streamlined Installment Agreement. In other words, for liabilities of less than $25,000, they have streamlined type processes, and we'll talk about those in later videos. But just know that if you owe less than $25,000, you probably won't have to submit this particular form to the IRS. However, when you deal with a tax professional like myself, we go ahead and have all of our clients do these Form 433A so we can get a full picture of what the financial situation really looks like, because there is an opportunity, depending on what your timelines kind of look like, there is an opportunity there to maybe do some strategizing. In other words, bumping up some allowable expenses, legitimately, of course, because nobody ever really thinks about, well, gosh, I wonder if I'm living within my means, as the IRS collection arm might think about it. So anyway, $25,000 is kind of the threshold there for what we're looking at. By the way, all these things that we're talking about here today are outlined in my book, Travis Watkins. You can get it traviswatkinsbook.com. And what we're doing here, in case you're wondering, is we're going through kind of the broad pictures that I've outlined in that book, but we're adding to them, and we're deep diving a little bit more than the book has, and ultimately we're going to be packaging this up for you so that you can see all these things in a book form, and at the same time kind of updating all the things that are in that book. But anyway, traviswatkinsbook.com is where you can download your own version of that. All right, back to what we're talking about here. Let's click on Form 433A. And boom, there it is. This is direct from the IRS's website. Let me make sure that you guys are still seeing what we're seeing. Yeah, very good. Yeah, okay, so Form 433A, this is the collection information statement for wage earners and self-employed individuals. As you can see, it was revised there last time, December of 2012. So this ain't a new form. And before that, the form before 2012, there was one before that. But this is the current form that the IRS uses, and the current form that we use here as well for consulting with clients as it relates to really the investigative, as we call it, stage of fixing a tax problem when you hire us to take care of your problem. So if you want to hire us, which I think you should, to take care of your tax problem and to talk to the IRS for you so that you don't have to mess with them, you can get a jump on the game here by going to traviswatkins.com, like we just did, that resources tab, and going on to the Form 433A and trying this out yourself. And hey, look there. These things are fillable forms. I don't know if they save or not, so I would certainly save these. If you choose to use these fillable forms, I would use this download button to make sure that you're not losing any of your work kind of there along the way. But let's talk real generally here about what the requirements are in that Form 433A. You'll see Section 1, personal information, full name of taxpayer and spouse, if applicable. So you got to put your full name there as it is on your account, or rather on your. I would use my last filed tax return to kind of as a guideline in case things might have changed since you filed a return. I'd still go ahead and, for purposes of this, go ahead and use the last information that you had on your last tax return. But full name of taxpayer and spouse, address, home phone, business phone, cell phone, and business cell phone. I don't know that I would turn all those things into the IRS if you're doing this on your own. You'll see, actually kind of skipping back here, there is room for your social security number there at the top, and your EIN if you have such a thing, if you're employed, you're self-employed. But driver's license number and state, social security number, they want one for you and for your spouse, even if they don't necessarily owe the IRS. And skipping down to section 2, your employment information. They want all of those things, how long you've been there, what their address is for you and your spouse. And people always ask me, well, if my wife doesn't owe the IRS, why do I got to give them this information? And it's complicated, I guess, is the answer. You may not always have to do that, but for purposes of what we're talking about here today, and if you were filling this out for our office, we'd want to know all that information there as well. In a nutshell, what they want to know, obviously, is what's your ability, and what's your ability as a family or as a married couple to pay back the taxes that you owe, and what the full financial picture there might be. But kind of a little aside there, you may not have to provide this information if these are purely one spouse's tax problems. So a little bit outside of what we're talking about here today, but for purposes of what we're doing, let's just assume that you need to put your spouse information in there as well. Section 3, other financial information. They want to know if you're a party to a lawsuit, where that was filed, if you've got a lawyer, what the docket or case number is, the amount of the suit. What they're talking about here is like if you were a plaintiff, you were suing someone. What they're looking for is, do you have some money coming down the pipe possibly for a lawsuit that you have filed rather than defending? Sections or number 7 there under section 3, have you ever filed bankruptcy? They want to know when it was filed, when it was dismissed, if there's a discharge, how they can locate the documentation on that. Number 8, in the past 10 years, if you've lived outside the United States for 6 months or longer. We talked about previously when it dealt with the statute of limitations. Statute of limitations is not running against the IRS if you've been outside the United States for 6 months or longer. So they want to know that as well. And hopefully you're getting the picture here that these are pretty intrusive, to say the least, types of questions. And it's just going to get worse as we go through this kind of in a broad manner. But that's the deal. When you're asking the IRS to cut you some type of a break when you owe them money, tax money, they are going to want a bunch of information. All right. They want to know if you're a beneficiary of a trust, an estate, or life insurance policy, where that was recorded. They want to know the anticipated amount that you could receive there as a windfall. They're going to want to know if you're a trustee, fiduciary, contributor of a trust yourself, and the information about that. If you have any safe deposit boxes, if you've transferred any assets for less than their value, in other words, fraud, and be real careful about what you put in this one if you're doing this one yourself. But again, for purposes of what you'd be doing when you're talking to our office about helping you with your tax problem, we'd want to know these types of things. They want to know in section 4 your personal asset information, cash on hand there, number 12. 13, they want to know about your personal bank accounts, plus investments in 14, plus available credit, which is kind of dicey. I don't know that I would necessarily fill out that portion if I was talking to the IRS on my own, because all they're looking for here is, hey, can you put some of this money that you owe on a credit card, or ask a bank to borrow that? And so that's pretty intrusive. Do you have any interest in life insurance policies with cash value? That's the same situation. They'd want to know if you can borrow any money against your life insurance policy. If you have cash value, again, I'd strongly consider not putting any of that information down there, because they're just going to be asking you to borrow. Term life insurance is a different beast. That could be an allowable expense, and we'll talk about that a little bit later. So they want policy numbers, all those things. They want to know what your real property is, where it is, what it's worth. They want to know what you might owe on it if you've got a banknote, for instance, on it. Amount of your monthly payments. I mean, these are basically financial stuff that you would fill out if you were, going to buy a car, borrow money to buy a car. So personal vehicles, they want to know if you've purchased any and all the information on that, what the fair market value of that is. People ask me, well, how do I know what the fair market value is? NADA.com is how you would know. Next section, personal assets. They're going to want to know about certain assets that you have. All right, moving to page 4 in a very broad sense. This is really the money ball. This is where it all is. This is your classic, really P&L type statement for yourself personally. Left-hand side is income. Right-hand side is expenses. You'll need to list gross monthly wages, interest, net business income, distributions, pensions, Social Security, child support, alimony that you receive, and other income. And these all have little footnotes to them that you can see right below if you need further explanation on that. Other income is agricultural subsidies, unemployment compensation, gambling income, oil credits, rent subsidies, etc. These, again, are all monthly things. They want it calculated monthly. And under footnote 1 there in section 5, you'll see that they show you how to calculate this into a monthly deal if you are paid weekly or bi-weekly or semi-monthly, for example. So gross amounts all go there on the left-hand side under income. All right, switching over to the right-hand side, total living expenses. These are things that will be subtracted from the total income. Food, clothing, and miscellaneous. You'll need to have some backup there. Housing and utilities, vehicle ownership costs, vehicle operating costs, public transportation. Really all these things, 35 through 39, may be defined in your region by what they call national standards. But you do have to have kind of in your back pocket there, if challenged by the IRS, you'll need to have some backup to show that you spend at least the amount that the national standards have in there. And we'll go over national standards here at a later time, but giving you kind of the broad overview, all your expenses are going over in this category. Out-of-pocket health care costs, health insurance, that's required now. Court-ordered payments, child-dependent care, life insurance, current year taxes, those will be subtracted. Secured debts, delinquent state or local taxes, other expenses, I love that one, total living expenses, the net difference between the left-hand side of income minus the allowed expenses. And by the way, this is really what the IRS would tell you is the universe of expenses that they would allow you. Our job as tax professionals is to get some other expenses in there that they would accept typically. But in a very broad sense, you take gross monthly minus or gross monthly income minus actual monthly living expenses, and that gives you a net value of what the IRS considers to be, in a very broad sense, what your collectability is with them on a monthly basis. All right. Skipping down here to page 5. This is section 6 and 7. Must be completed if you're self-employed. All right. And what they want to know essentially is some information about that business or what your income and expenses might be for a self-employed person. And they want to again know any credit cards accepted by the business, business bank accounts, accounts receivable, business assets, and then a very similar section 7, which is very similar to what we looked at up here for just wage earning individuals. They want to know what the gross income on a monthly basis from the business is and its actual monthly expenses. And what shakes out there is line 89, the net business income, lines 76 minus line 88, and that would actually, that number would end up going into line 23 for the individual portion. The net business income goes right there back up into section 5. So they kind of work in tandem. If you're self-employed, you got to fill out that portion. I'd start, if I'm self-employed, I would start when it comes to the actual money part of this form. I would start at section 7 there. Your gross receipts, your income, and when I say your, I mean your businesses, interest, dividends, cash receipts, minus all business expenses there on the right-hand column, all right? So here's the big takeaway from what we're doing here today. If the net difference on line 50, that's section 5 of what we're looking at, the form 433A, if that number is a positive, in other words, there is money left over when you're talking income minus expenses, that is the least amount that the IRS would accept in some type of relief program or collection alternative, as I like to call them. Typically, either a full pay or a installment agreement of some type. All right? They'll take that monthly amount and they'll extrapolate that, or they'll multiply that times the amount of months left over on their collection statute expiration date, their statute limitations, and that's the minimum that they're going to accept, all right? If that number is a minus on line 50, and it's a legitimate minus, then you are probably looking at a uncollectible status with the IRS. In other words, you cannot pay for your necessities of life, and that would be a situation where now you would be asking the IRS, hey, I need a safe harbor from you guys for at least 2 years, maybe longer, because I can't pay for the necessities of life. All right? Another big strategic takeaway here, in a very general sense, would be that you can, depending on what the timing of your collection reality is. Let me go to let me go off screen here so I don't bore you to tears looking at this form 433A. All right, we're back on screen. Depending on how much time the IRS has to collect and how hard they're coming after you at this moment in time, you may be able to strategically but legitimately bump up those allowed expenses. You can never really take away the income side, that left-hand side of the Form 433A, the P&L type section there. But the right-hand side, you can legitimately bump those up to minimize that net disposable income there every month. And that's the recipe for things like offers and compromise and settlements of different types with the IRS, all right? if you have a hot revenue officer on top of your case, not a hot revenue officer, a revenue officer that's hot on your trail, I guess I should say, you may not have a whole lot of time to dig down into this and start strategizing on that. Now, revenue officers are notorious for coming at you with these Form 433s and wanting you to fill them out, or they may help you fill them out. You always got to beware when the government man's there to help you. But those are situations where you probably don't have a lot of time to do some strategizing on that right-hand column. But if you do have some time, and that's what I'm in the business to do, which is to slow down these immediate threats from the IRS, and we've got quite a few things that we can do to at least slow up the process there, the collection wheels from grinding, then you definitely want to take advantage of the time that we are getting for you and to start strategizing with us on how we can legitimately raise those allowable expenses so that there is less net disposable income at the end of every month. All right. Again, all these things are outlined in my book, The Ultimate Survival Guide for IRS Problems, which you can download a free copy of at traviswatkinsbook.com. Of course, if you need immediate assistance with a tax problem, then you should call us at 800-721-7054. All right. Thanks for watching, and I hope you have a great day.